everyone, and welcome back. My name is Greg Furman, and this is the Forex Weekly Outlook for the week of May the 15th, 2017. Now, to begin this week's presentation, we're going to begin where we always do with the US dollar index, a very important part of our Forex, commodity, and equity trading alike. So when we look at this right now, I want to bring everybody's attention to the current lines in the screen that I've drawn in here. Now, in most cases, institutional flows dominate around the middle of the month, and they're usually flows out of the US dollar. You can see if we bring this down towards basically what I work on this with my own direct clients, usually between the 15th and the 20th. Each month the dollar sells off, and then usually around the beginning of the month the US dollar goes higher. So these types of flows are often very, very repetitive. So that leaves us right now with a signal that potentially could send the dollar lower. Now, a lot of these signals have been mixed over the last couple of months with a number of different factors. With Trump, we've got the elections out of France. A lot of different things are causing fluctuations in this, but I think they're still there. Now, what we can assess here right now is the key vantage point level comes in at 99.26. We're closing basically just below that at 99.13, but more or less on profit taking on Friday. But our indicators for further dollar strength are quite mixed. Now, normally the dollar would start to sell off towards the 20th, and it can be as early as the 15th on those institutional flows, out of the dollar. But again, there's been a lot of contributing factors here that could cause the dollar to continue to move higher for at least another 3 or 4 days, potentially. Now, the main indicator here we would be watching is the VantagePoint predicted RSI at 44.5. We are not showing any strong momentum to the downside as of yet. You can see here that I've also drawn a trend line in here. We've got a very tight wedge formation. This lower trend line is drawn off the October lows. We've got a break of this wedge formation, so I would still potentially look for further dollar strength. Now, as this applies to the euro, the easy way to look at this for your trading next week here, guys, we have a swing high. I'll put a check mark here at about the 110.25 area, but we can assess here that the market is running right along that VantagePoint 18-day predicted moving average, and it's taken a strong bounce off of that on Friday. Now, my opinion on that is that's largely profit taking. We had a very, very slow week in the euro. Soon as we came out of the French elections, the euro immediately sold off. This is what I did suggest could very well happen in last week's outlook, that this is nothing more than a buy the rumor, sell the fact, and that the euro has been extending all the way up to the day of the election, and then down it goes. So if the euro is going to recover here for next week, 108.51 is the level you want to watch. If that level continues to hold, the euro could rise back up into the 110.30 area, but I think we are going to see sellers still camped out there. Now, our long-term predicted difference is still pointing lower. We still have a crossover on the predicted MACD to the downside. We're at 57.9 on the predicted RSI, so we do not have a lot of strong upward momentum, just to point that out. So to begin the week, selling into rallies is still the preferred, for the most part, is still the preferred strategies, as buying on dips on US Swiss franc is also a preferred strategy. 99.95. This basically is a euro US trade here, guys. One goes down, one goes up. That's how this works. So my concern right now with this particular pair, which could be a leading indicator for the euro, is we have the medium term crossing over the long term predicted difference rate here to the downside. So we'll be watching this one very closely. Right now the pair is overbought. That's likely all it is overbought. We're going to retrace, but we would be looking for this area around 99.95 to actually hold or thereabouts if we're going to be able to recover and start moving back up to the upside. And that is a very critical level. Now, as we look at the pound dollar going into next week, I've talked about this one extensively over the last few weeks. We have a swing high here. Again, after that flash announcement of there's going to be an election now, but the pound has done nothing since. The Bank of England has come in and cooled this pair right off. So to begin the week here, guys, 128.44, that critical VantagePoint 18-day predicted moving average. But the key indicators from VantagePoint, the predicted differences, the predicted MACD, they are all pointing lower. So on a break of 128.44, that potentially can open up a move down to this lower trend line to our demand area in the 127 area. I think that is very likely to start the week, that the pound dollar basically to start the week we would look to sell into rallies. Now with the dollar yen pair, much like what I've talked about in last week's outlook here, we've got a pretty strong resistance area here at this swing high at the 115 area. The VantagePoint indicators are warning that we could be looking at some downside here. Now 72.5 is not overbought on the predicted RSI, but it absolutely was, as it hit almost the 100 level on the predicted RSI. And then you can see that the pair lost momentum. We've got a new trend line that's going to form here. Our key VantagePoint levels coming in at 112.41. I believe we will potentially move towards this area, but it would take an equity market sell-off for that to happen. So right now we look at our neural index, our strength indicator, they're all pointing lower, so a corrective move to the 112.41 area is likely. But for now, we would likely remain buyers of this particular pair as we look for those global equity markets to turn around. And again, the interest rate differential between the dollar and the yen, it favors the dollar, as there is an 80% chance that the Fed is going to hike in June. Now, as we look at the Canadian dollar for next week, a US Canadian dollar pair, another interesting setup here is we've got this critical VantagePoint 18-day predicted moving average, but we've been holding pretty much right along the 8-day predicted moving average multiple days in a row. Very interesting how you can see the market is using that VantagePoint level. It's bouncing off that area. But as the market has been moving up, some of the additional indicators from VantagePoint have been losing momentum. The medium term crossing over the long-term predicted difference to the downside. In my respectful opinion, if we do get into the institutional flows out of the US dollar, the CAD will come under pressure. Now, what's going to make this pair tricky to trade over the next couple of weeks, maybe next couple of months, maybe even the remainder of the year, is the comments between the Canadian Prime Minister and Trump. There's a potential trade war brewing here between the two biggest trading partners. The US and Canada cannot seem to get along right now. So we've got coal tariffs, we've got lumber tariffs. This is going to wreak havoc on this particular pair with a slight bias towards strength on the US dollar. Now, what we would look for here is rising oil prices to sell USCAD. Right now, it would appear we have a fairly firm top in place at 138, but we also have absolutely rock solid support on these critical VantagePoint levels between 136.86 and 136.30. So the main advice I can give here, as I would to my own direct clients again, would be to sell the top and buy the bottom until this range between 136.30 and the 138.10 area breaks. Now, as we come into the last two commodity-based currencies, pretty strong support here right now at the 73.10 area on Aussie US. Now, we could have some opportunity to buy here as the VantagePoint predicted differences, short, medium, and long, and our strength indicator are actually starting to rise here. And this is largely because of Australia, New Zealand, and the weakness in the Kiwi from the Bank of New Zealand. So right now, that critical VantagePoint level 74.38, we're closing at 73.85. In order for us to have any shot of retaking or moving back towards this 75 area, we must break through this critical VantagePoint 18-day at 74.38. So that is the area to watch this week. Possibly good longs down at 73.10, but there's also potentially a very good short at 74.38. Now, with New Zealand US this week, I'll be very brief on this one here. Basically, we're consolidating right along this potentially a quadruple bottom here. 68.40 here, guys. That's the level to watch next week. We don't need to get into a lot of complicated analysis on this pair because it's largely going to follow Aussie US for the most part, but the VantagePoint key level is at 69, and despite the Bank of New Zealand, all of that very poor data out of New Zealand, it's still holding on. So if copper prices, gold prices turn around, Aussie US, New Zealand US, they're going to turn around too. So that's what you want to watch for next week.